First, we need to evaluate Bitcoin based on its internal fundamental and technical factors. I call this the microeconomics of Bitcoin. You want to look at historical price movements, cycles, and adoption. Bitcoin is actually easier to evaluate because there are very few factors that influence Bitcoin prices that are internal. Unlike a business that can be affected by bad management, the success or failure of new products, or earnings releases, Bitcoin is very simple. There are extreme price swings based on the general opinion about if Bitcoin will be the new money of the world or perhaps irrelevant. Hence, the Bitcoin price has had many cycles and has gone up over 100 to 400 times in price early on, but also lost over 80% at times. From 2011 to 2013, prices went from $2.40 to $1,160 for a 409x gain. It later went down to $150 from 2013 to 2015, down 87%. It rose back up to 19,800 from 2015 to 2017 for a 130x gain. Then went back down to $3,100 from 2017 to the end of 2018, down 83%. Then it rose again 22 times to its all-time high around 69,000 from 2018 to 2021. It's currently down over 70% to around 19,500. Adoption has been steady and increasing significantly over the past decade, and the new supply of Bitcoin decreases every 4 years. So there's an upward price pressure purely on supply, demand, and new interest. We can see a steady increase in those who own at least one Bitcoin since the beginning. Those who have a sizable amount of 10 Bitcoin or more have generally increased despite a slight dip the last couple years. The strongest believers who hold large amounts of Bitcoin and rarely sell also limit supply that allows prices to move up. The big whales who own large amounts of Bitcoin have been increasing their holdings, and the institutions are becoming more comfortable owning Bitcoin. But after recent spikes, the trend has flattened out. Next, we compare Bitcoin to gold. They have similar characteristics as a store of value. Gold has hundreds of years of history, but Bitcoin is more portable and easily verifiable than gold. So Bitcoin is often considered digital gold. We can compare the total value of the entire Bitcoin supply to the entire supply of above ground gold inventories. Currently, total Bitcoin value is only about 4% of total gold value. Bitcoin may eventually catch up to gold, or at least get up to 10 to 50% of the total value of gold in the next decade or two. So Bitcoin has potential to go up 3 times to 15 times relative to gold. One of the best tools that capture much of the internal factors and microeconomics of Bitcoin is the CBBI index from Colin Talks Crypto. Although this index was not very useful for calling the top in the past cycle, I'd consider it a very powerful tool in general and can give you good guidance when Bitcoin is undervalued. The easiest way is just to start accumulating when the index falls below 10 and selling when it rises above 90. It's currently at 8, so this indicator suggests it's already a very good time to buy. There are 9 different indicators that track such metrics as price cycles, profit loss indicators of current holders, on-chain Bitcoin movements, Bitcoin miner revenue, and other metrics. I'll get into the details in future videos. However, you can see based on the red circles when the signal is below 10, the prices were near historical bottoms. I hope you found this video educational. If so, please hit the like and subscribe button for future updates on the micro, the macro, fundamentals, and some technical analysis for Bitcoin and crypto. Thank you, and see you next time.